Tesla. So while we're waiting for Jonah to get in here and for us to get to that first part, first, let me give Wolf co-host. And then second, I just want to ask maybe some of the speakers quickly, the bell just rung. How we feeling? How was your day in the week? How was your day in the week? How was your day in the market? How was your week in the market? How's everything going? Anything, first that you guys want to touch on that stood out for you? Stock Talk Weekly, if I can come to you first, I'd love to.
Yeah, what was the question? Just what stood out? Is that what you're asking?
Yeah, just basically an intro to this. Like, we just closed. Do you have any initial reactions from the week, or really just anything that focused for you or anything like that?
Yeah, it was a really good week for me personally, just trading wise. A lot of volatility, which I love to see. I did I kind of covered this earlier on our last spaces, but I can kind of recap it. Did a lot of covered calls selling this week on names with either really inflated IV or volatility that they might not typically have, where the premiums get really jacked up. I generally find that a great time to be selling calls and exercising optionality on your equity positions. And so I did a lot of that this week. I also got in and out of a few positions I discussed earlier. I was adding bid F very heavy in that 780 range, 775 to 780 range, which ended up being like almost the perfect bottom. I was kind of using the earlier weekly supports in that 780 to 790 range to dictate my ads. We saw a nice close for that stock today. Closed up, I think, after hours it's down a bit, but it closed up above 850. So those ads turned out nice. I think those Bitcoin mining stocks continue to get a lot of exposure into next week as people kind of digest that, the rejection of that VanEck spot ETF on Bitcoin. To me, that really speaks to, these mining stocks being a haven for people who are in the equity markets or maybe overexposed to the stock markets and don't really have tremendous exposure to crypto or to Bitcoin itself. And, they want a form of leveraged exposure on the equity markets, SEC protected equities that are, trading with Bitcoin. And granted, these companies, these mining stocks, if Bitcoin rallies over the weekend and is down on Monday, you might see a muted pop on some of these. So they're not trading perfectly in line with the absolute value of the underlying asset. They're just trading on momentum around the underlying asset. So, finding entries on a lot of these is really technically driven if you're trading them. So I've been using that to kind of find my loading points, and it's worked pretty well over the last few weeks. So that's what I've been doing with the Bitcoin mining stocks. On SPACs, I've been continuing to add to DMYQ. SEAH, I considered it, but I already have an overweight position there. My cost basis on SEAH is like 1007, so I don't see the merits for adding here, 15% higher. Outside of SPACs, I did a bit of, I guess that's a D-SPAC, Lucid, but covered call selling there as well. I did some bounce trades on ChargePoint that worked out really nicely. And that's about it. IonQ, I'm still long, but I mean, I have like an 880 cost. So, buying up here just seems absurd to me, considering how tight this run has been in such a short period of time. I'd rather wait for the earnings reaction, positive or negative. I mean, if it's positive, good for my equity position. If it's a negative, that's when I might consider buying back some calls or potentially adding more. But I think there is a potential for a negative earnings reaction for IonQ, so I'm managing risk there. Tesla, kind of just watched it this week. I have a pretty large equity position on Tesla. I have like a little over 500 shares, so it's decent size for me. But I don't really touch those shares. The cost basis is so low. Again, I feel like I have equity flexibility there. I usually try to either sell covered calls into Tesla strength or trade the options in some way. Didn't do a whole lot of that this week. RDW kind of had me in a mumble. That is one of my biggest positions. It is my biggest position. So, that downturn off earnings kind of scared me a bit, spooked me a bit, but it stayed above my cost average and then rebounded really nicely off that $10 floor. So got a good recovery there on the equity side. Didn't really look at options for that name this week either. That's what else have I covered? BidF, DMYQ. Oh, tried a day trade on 10, Didn't really work out, but it's been floating above my entry. Was waiting and hoping, I guess, kind of to see some Rivien sympathy come to 10, considering that they're, a critical suspension supplier. Rivien has a very unique suspension system, which some people say drives some of their value of their vehicles, but who knows? But either way, 1 billion market cap, 16 billion in revenues, negative margins, and obviously slow growth is part of the reason for that. But I thought there was more room on the market cap there for it to trade up to maybe 15 or 16 bucks. Just didn't get that move this week. Still holding on to equity there. What else have I looked at? I think that is pretty much all I traded and looked at this week. Yeah.
Fascinating. I love it. There was so much, so comprehensive. Would love to come back to you a little bit later, maybe get some more thoughts, more specific questions. But quickly, with the Bitcoin ETF that got rejected this morning, were you watching the price of crypto, of Bitcoin specifically, and did you see the kind of dip for a little bit and the recovery? Did you have any thoughts around that, or kind of the instant
Yeah.
reaction?
Yeah, I expected the rejection of the spot ETF to cause some negative sentiment in Bitcoin. We saw that. I think it was down, 4% at one point almost. But I expected to see the negative reaction in Bitcoin. But what I did, and this was a risky play to make. What I did was I added some call options on some of the mining plays, thinking that they would get positive sentiment from that rejection, which is kind of converse thinking because people would say, oh, Bitcoin ETF got rejected. Everything Bitcoin related is going down. What I was thinking was, no, these are now even, there's so few Bitcoin exposures that are well regulated, have good liquidity, have good volume. There's so few Bitcoin exposures, and Bitcoin mining plays on the equity markets, especially when they're Nasdaq listed stocks. These are SEC protected stocks that people who might have a little bit more of a skeptical view on cryptocurrencies are willing to buy. So I added, most of them were red today. Before that news dropped, and I just kind of digested the news and said, these are going to bounce. So I added a bunch of weekly options, kind of a gambling strategy. Don't recommend for people who are new traders, but I was just expecting a bounce in those names intraday, and we got it. We got it in pretty much all of the names that I went long on today, and so I sold out of all of those calls, headed into Power Hour. And some of those stocks. I mean, Riot was up 12% to end the day, started the day red. So clearly, to me, that was a sentiment reaction to the rejection of the Bitcoin spot ETF that drove liquidity to these stocks, because people are looking for ways to get exposure to crypto without actually owning crypto. And I really believe in that narrative. And so I think that the rejection of the ETF actually improved the case for the mining stocks, but obviously, caused a bit of a mild daily correction in Bitcoin.
Love it. Thank you so much, Stock Talk. Always love having you. Would love to get back to you a little bit later. Quickly, before I move on to Jonah, who I see we just got back up here, Stock Talk just talked for a while there. He is one of my favorite follows. We have an amazing panel of speakers up here. Jonah is putting out some of the best content. He's working so hard. He's getting those gains in at the gym and in the market. He has content and stuff all over the place. He puts Substacks, everything like that I was just able to read. So Jonah's an amazing follow as well. And then Brad, we're super lucky to have up here. We've been doing a lot more spaces with him recently. I expect to keep doing this with him ongoing, just because he knows so much about this stuff, and his Twitter feed is just amazing. So before I throw it over to Jonah, just quickly check out all these speakers up here. I'll give you the pitch on Wolf, my co-host, and everything like that later. But yeah, Jonah, quickly, really whatever you want to talk about. I know we had mentioned a little bit talking about Celsius and Upstart earnings. If you want to start there, if you want to go into anything like that for the week, floor is yours.
Okay, so I'll talk Celsius first. So Celsius sold off at the end of the day because there's apparently what I thought maybe was a rumor, that there's a subpoena, that the company received a subpoena. So this happened a couple months ago where there was a rumor going around Twitter. All of these bots were retweeting it that Celsius had gotten something from the state of Texas, and it turned out that it wasn't Celsius, the drink company, it was Celsius, the crypto company. Well, it does seem, and I'm going to read this off word for word out of their 10Q. So this is from the Celsius 10Q, which probably just dropped, or maybe I'm not even sure which 10Q it is. Someone just sent me over a screenshot. So it says on January 8th, 2021, we received a letter from the SEC seeking the production of documents in connection with a non-public fact-finding inquiry by the SEC to determine whether violations of the federal securities laws have occurred. On August 20th, 2021, the SEC issued a subpoena for production of documents in connections with the matter. Neither the January 8th SEC letter nor the August 20th subpoena means that the SEC has concluded that the company or anyone else has violated securities laws. We have cooperated and will continue to cooperate with the SEC staff in its investigation. At this time, however, we cannot predict the length, scope, or results of the investigation or the impact. So maybe someone at the company, tipped off someone. Maybe there was some, it could be nothing, obviously. I mean, I assume these things probably happen all the time with publicly traded companies, and I'm sure most of the time they probably end up being nothing. So, I mean, it's sort of ridiculous that the stock sold off 14% because there's a very good chance that this has absolutely nothing to do with the company, nothing to do with their performance or their quarterly reports or their numbers or anything else. And this is possibly someone at the company that maybe traded on non-public information or shared that information with someone else. So I mean, it's sort of ridiculous that the stock traded. I mean, it was trading at $90 like half an hour ago and then dropped to 84 in like the last 15 minutes of the day. So oh, well, sort of sucks to come on and talk about Celsius right now after that bullshit. But I mean, my guess is in the next couple months, we'll end up getting some clarity on the situation. And most likely it turns out to be nothing, at least nothing for the shareholders. Maybe someone at the company did something wrong. I have no freaking idea, but I'll most likely be buying more Celsius on Monday when the market opens. Actually, I might even buy a little bit more right now if I can get the order filled. So Celsius reported a phenomenal quarter on yesterday morning. Stock was going to be up 15 or 16% on the open. And then it traded down, most likely because net income was lower than expected, but every other metric was basically higher. I mean, so net income and gross margins were a little disappointing, but when you're growing at 157% year over year and you're dealing with supply chain problems and higher costs of cans, I mean, unfortunately, that's gonna hit the margins. There is not another publicly traded CPG company on the planet that's growing as fast as Celsius. So I don't give a shit about gross margins. I don't give a shit about net income being down over last year. This company's growing 157% year over year and 214% year over year in just the US. So they're killing it. 100, I think they're up to 118,000 stores right now or locations, 224 DSD partners. And if you look at the press release, their growth with their DSD partners is absolutely ridiculous. So this company pivoted from DSD or from DTR to DSD, and it's absolutely, was proving to be the right decision. So I'm not selling a effing share of my Celsius position, and I'm going to be adding on this dip because I think this is just ridiculous that it sold off. So hold on one second.
Love it.
Quick Celsius break.
Okay, so trying to think what else I want to say about Celsius. I'm just so fucking pissed off right now. Sorry, this is not a good time to be talking about stocks after that bullshit at the end of the day. So let me talk about Upstart. So once I know what the fuck's going on with Celsius, I'll come on next week and talk about it. But I'm not going to sit here and speculate about a fucking subpoena that I know nothing about. So I'm just pissed off that the fucking stock sold off 14% at the end of the day. So Upstart, once again, shitty price action after earnings. I mean, there was nothing not to like in earnings. It was just that expectations were so high. So, the company beat their own estimates. They beat analyst estimates. They raised guidance for the year. They did say on the conference call that, the guidance that they gave for Q4 was probably conservative. So they're guiding 255 to 265 million. They beat this quarter they beat their own estimates by about 8.8%. So if they beat that again for next quarter, they'll come in at like 282 million, which I don't have my fucking spreadsheet in front of me, but let me just see. So 282 million would be, what the fuck is this? I don't even know. I can't even fucking think right now. I'm so pissed off. So I'm gonna bow out. I'm doing some webinars next week. I'm gonna be talking about all these stocks in detail. I'll have all the numbers in front of me. I'm just really pissed off right now. So probably better that I sign off. Everyone have a good weekend,
Jonah,
and I'll see you guys next week.
Before you do, can you just do me one favor? Can you
What?
just tell us when your webinars are for next week, or maybe if there's a pin tweet or something where we can find
Yeah,
them?
I'll post them on Twitter. I sent it out to all my Substack subscribers. So if you're on Substack, you got all the links. I mean, there's 3 links. I can't really, like you have to sign up for them. So, and you have to register. And that way, if you register, they're going to be recorded. So you get the recording, and then I don't have hundreds of people DMing me asking for the link to the recording. So, my Substack is actually free. You can sign up for the free version. The link's in my bio. So if you want to get those links, just sign up for my Substack. That's all I can tell you. I probably won't post it on Twitter. So if you want to, if you want to watch the webinars, there's going to be 3 of them next week. I'm going to cover probably 5 or 6 stocks on each one. Go to my Substack and sign up.
Perfect. Thank you, Jonah.
Okay.
Again, Substack link is in his bio. Thank you for coming in, Jonah. Perfect. I think before we get into some of the earnings and everything like that, I want to finish going around to everyone, maybe asking just quickly, we're now 15 minutes removed from the market's close for the week. Just any initial thoughts on how you feel and anything stand out or whatever like that. Wolf, I would love to start to you, my amazing co-host, to bring you into it.
Is this just, wait, reiterate the question once more?
Really just kind of just get us started, more like the intro, go around, initial thoughts for the market from this week. If there's anything specific that jumped out to you, love to hear it as well.
Yeah, sure. I was pretty flat this week. Talking from my growth portfolio, finished the week up about 1%. Rough because I was up 8% midweek, and then just kind of got slapped by, I don't know, I guess the 2 days in a row that growth stocks were down. I made like one bad option trade. I don't know. My option trades were basically flat this week, honestly, overall. And then obviously crypto had a little bit of a dip after that all-time high. So that pulled me back a bit. So yeah, finished currently sitting at 0.87% up, but I can't say, anything bad about having overall an up week. Continuously just, been seeing those for the last 3 months. Made a good amount of trades this week. To be honest, I've really been honing in on this idea of like phantom trades. So I've been not taking so many trades, but really trying to write down a lot. So I spend every day this week, I spent at least an hour or 2 in the morning just scanning the markets, looking on, a few different scanners, going through a couple different Discords, chatting with people on Spaces, and just figuring out like what are trades that I like, and then writing those trades down. And even though I didn't take them, kind of seeing the patterns of what happened. And there were some that I really missed on today, like Roblox, Shopify. Shopify, those went like 1,000%. Those were insane to see. But you can't hop in on everything. And also, I'm not like scalping or anything like that actively. But overall, the actual moves that I made for this week, I sold a good amount of TTD to get out of that as it had ran up, 30% this week. I bought a little bit more Tesla on the dip. There was just, some good news all around. And I think, Elon selling doesn't change my thesis on the company. Besides that, opened a $12.17 call in Marvell, MRVL. So still holding that, going to hold that through next week. Let's see what else. This company EVgo, I did scalp an option on that EVgo. That was just kind of running. AMD, I took one option that was great, made money on, and then I lost that money back on another option on AMD. I'm still holding these root calls. So we'll see what happens there. And then I made a little bit of moves on NVIDIA. I guess the bigger moves for me this week were I started positions in both DMYQ and SEAH. Decent sized starter positions from my portfolio's perspective. And I put both of those. I started with DMYQ in my Roth, and then I put SEAH actually in a different account. But I put it in basically accounts that I don't look at every day, or at least I don't look at all day, because I just want to let those kind of hopefully grow over time and just, seek out some potential there. But yeah, overall, I thought this was an interesting week. If you take a look at the overall indices and SPY, nothing too crazy happened. Obviously we had a slight pullback, but then we basically made it up today. So I think we closed just under all-time highs at 470. We closed at 468 basically. Like nothing too crazy. I don't think we've been necessarily derailed, bounced right off the 10-day EMA. And like a lot of people said, I wouldn't be surprised if we had a little bit more pain next week as we catch back up to the 20, 21-day moving averages, which are very healthy to test. So that is overall my thoughts on them. And also, RSI, if we were to do that, would probably drop down closer back to like 55, 60, which again is also a pretty healthy thing. So I think we're in good shape. I haven't seen anything that, alarmed me from this week. The news has been fine. I guess the only worrisome thing was inflation, but I don't have too many opinions on that. So that's my thoughts overall.
Love it. Thank you, Wolf. Always love having you. My favorite co-host. Probably one of the only ones I do. Actually, I do a lot with Stock Talk Weekly as well. Let's throw that out there as well. But yeah, I'm going to keep it moving. Brad, same question to you. Kind of just thoughts on the week, anything like that, anything that stood out. I know you had a busy week with earnings.
So
sorry.
I did have a busy week with earnings. I talked about this earlier today, but 11 of my 25 companies reported this week, and they all did so in a 4-day span. So that was a lot of fun to digest. But everything. I mean, I try as a very long-term oriented investor, and I take a different approach than some other people here, and that's completely fine. There's a million different ways to do this, or several different ways to do this well, to invest well. But for me, I'm really focused on not so much the price reaction, but what the actual report looks like, what management commentary felt like, how guidance was, and for me, out of the 11 reports, 10 of them were really good, which I was pretty pleased with, and for me. A lot of people get confused because I'll say, okay, GoodRx had a great report, and then I'll get comments. Well, it's down 10% after hours, so of course it wasn't a great report. But in my point of view, and people can feel free to disagree with me, earnings moves are dictated by sentiment, by expectations, and not so much about for the long-term investor a thesis remaining intact and the company remaining healthy with the ability to continue delivering profitable growth. So as those dips happen, and it happened with Upstart too, I thought that was a phenomenal quarter, exactly like Jonah said. And so I say this a lot, as share price reactions kind of become more divorced from how I think the company is performing, and I use these quarterly reports as progress updates. I generally I adopt the incredibly cliche Warren Buffett sentiment of be greedy when others are fearful. So for me, it's really just staying focused on the long game, trying not to worry too much about the price action. And for somebody else and other people who are going to talk here, it's completely different. So I think it's just important to highlight multiple different ways to do this. And it's exciting, or it's interesting for me specifically to hear about some of the like Stock Talk Weekly talking about a more trading oriented mindset, because it's honestly educational for me. I take a very, again, long-term investing mindset. So I'm excited to do this spaces as always. Thanks for having me.
No, we're lucky to have you. I'm excited to hear your thoughts on some of the earnings that we're going to have in a little bit. You get some really great breakdowns from that. But before we get that, I'm going to get to our last planned speaker up here. Got a call. I'm back now. But Jay, I would love to throw it over to you. Kind of 10,000 feet view looking down. How was your week in the market? Anything that stood out? Yeah.
Hey, guys. Thanks for having me. Very interesting 2 weeks in the market. I think I wrote down about 24 growth stocks. Many of them that did well, that met their estimates on revenue, gross profit, that were down 15% or more. So we've been talking about this for a while. A lot of these companies might be great companies and they might be good long-term holds, but prices don't move in the same line forever. And I think since May, I've been talking about balancing factor exposures, having diversified portfolios, with special situations, REITs, SPACs, cyclicals, companies that were trading at really low multiples earlier in the year. And, it might be a good time to start looking at growth again after, the next 2 quarters, because there are a lot of great companies in there. I spent a lot of my week this week. There are 44 SPACs that reported earnings. I'm not going to go through all of them. We're still digesting, but we have fundamental views on almost all of them, and we rank them 1 through 5. There are 2 names that I swung this week that surprisingly did really well. The first was DocGo. After it sold off to kind of 840s, I got in at 860. I think, it's a very decent business that was sold off as a de-SPAC because of technicals. Picked up a name yesterday, Mimo, Airspan 5G name, bought it around 620. That was about 15%. Still have been long Supergroup, warrants and common. Those did extremely well this week. I felt mixed about this Jim Cramer thing last night, but Grubman came on. They actually said nothing promotional at all. The business trades at a huge discount to all of the esports names and in sports betting names like DKNG. And I think one of the reasons why even the SPAC presentation shows it as a discount was because it had a lot of European exposure, and European names generally trade a lot cheaper to the US, but it's expanding in the US, won a lot of licenses here. AGC, although I'm no longer in it, that hit $17 a share. And I think was one of the first SPACs, apart from the Trump SPAC, to actually breach the 15 level as a NAV SPAC. So, given the 38% short interest, that was a home run, in calls, then did 3 round trips in the common with minimal downside. 1005, 1013, 1020 ran up 3 times in a row. Then I, from a special situations perspective, looked at Toshiba and GE. Both are spin-offs. Elliott is behind Toshiba. It was just announced today. It could be interesting to look at. It's potentially going to break into 3 businesses, so keeping an eye on it. Have to do the work. But I want to keep it brief. There are some names, if you just monitor the volume, that could be interesting for next year. One is Dragoneer Growth, DGNS, Decarbonization plus Acquisition, which I bought on the dip, DCRC, EV infrastructure play, NGCA, which is an interesting NAV spec as well, BRPM, which is the right-wing coffee play that could be interesting, MCMJ, which is closing on December 3rd, is the marijuana SPAC that could do exceedingly well. BRPM was FaceBack, and SBEA was the right-wing coffee. Both are trading below 1040. Those could be interesting. So there's just so much going on. I actually had one of my best weeks of the year, just being in SPACs and sizing appropriately, while everything else in the market was volatile. So, I think it's really interesting to be flexible in your strategy. And there are a lot of things I've learned along the way that really helped me trade and be nimble. I actually sold most of my growth stocks. I've been pretty vocal about it. And I bought some dips. But I'm going to be more convicted in buying more probably next year, when I think that there's going to be a lot more volatility.
Awesome. Thank you, Jay. You actually sparked a question for me, and I'll throw this around to a couple of the speakers since you kind of sparked it for me. Jay, I would love to come for you first, and then we'll get into the earnings after that. So there was an interesting theme that developed that obviously is not anything new for the stock market, but isn't something that I had been seeing too much around, and it felt like this week it became front and center. And that was companies, splitting into multiple companies, or kind of, you said the word, I don't have it or whatever, but
Spin-off.
GE announced it. Spin-off, yeah, I should have known that. But yeah, 3 companies came out with the spin-off announcements already. GE did it earlier in the week. I didn't even know about Toshiba, but I looked and it looked like they did it today. And then Johnson & Johnson also came out and announced it today as well. And then I even saw there was an announcement that, or a rumor from Deal Reporter that 3M was considering it as well. So
didn't somebody, General Mills, or who was it that owns Progresso? I think it was General Mills that did it.
Yeah,
was that a sale to another company or something, or was it a spin-off?
Well, I mean, I guess in effect, whether you're spinning off a portion of your business and taking it public, or spinning off a portion and taking it and selling it, same. Still spin-off, right?
It's a lot different. So the difference between a spin-off and a direct sale is when you have a spin, that trades when issued, there are a lot of dynamics that make spin-offs interesting. And there's one spin-off that we didn't talk about, that was the IBM spin-off. And you can see that with spin-offs, the difference between just selling a part of your company is you have 2 tickers, and you essentially get a dividend of the smaller stock or the smaller spin that's coming to you. And in the case of this IBM spinoff, you can clearly see that when you have a spinoff, if the holders don't like the company that's being spun off, or IBM, for example, pays a dividend and the company that's being spun off pays no dividend, you can find really interesting buying opportunities. Well, first, you can find shorting opportunities if you think the company's going to sell off because the buyer base doesn't want exposure to that. And then two, once that company is sold off and is trading 30, 40% peers, they become really interesting buying opportunities. So one example from earlier in the year where the technicals fully played out was L Brands, which spun off Victoria's Secret. And Victoria's Secret was one of my best trades of the year. Like off the break, it was trading at like 4 times EBITDA in the spin-off presentation. And if you did the work on it, their EBITDA was inflecting. They changed their branding. They had cut costs. They're becoming more friendly. Victoria's Secret was known for being transphobic, and they didn't cater to overweight women, and they completely changed their branding. You saw EBITDA inflect during COVID and margins grow. That name was up 70% because very few people were covering it. It hadn't traded as an individual company. So spinoffs, a lot of the companies that do spin off their targets, the targets tend to be underfollowed by Wall Street. So whether it's a long or a short, they don't always rally. Sometimes they're great shorts. You can do your own work, which I think is really interesting. Just like you can do your own work in the SPAC market when Wall Street isn't covering those names. So I can spend a lot more time on spinoffs later in the call, but I think that next year we're going to have a lot of spinoffs and a lot of M&A because the market's so highly valued that CEOs are trying to monetize parts of their businesses that they don't like. And it's probably the right time to do that before rates go up. So hopefully I answer that question. There's one name that I think I missed that was a big name in the market, at least in SPAC world, which is GGPI. With the Rivien IPO, Rivien is worth, is trading at 100 billion with effectively no production. Lucid hit 70 billion. I was actually short Lucid from the highs because technically I knew institutional investors were probably going to be selling Lucid to buy Rivien, which ended up being a great trade intra-week. And then I took a lot of my gains and I took a lot of the cash I had. And, I've been on this spaces before. I raised a lot of cash late in the summer. And I've deployed that in GGPI. And then after GGPI rallied, I sold covered calls for 5% premium on top of that. So just a crazy, crazy week. I think we're going to be seeing a lot more special situations, a lot more spins going forward.
Stock talk. Any thoughts you want to give on this extra? Did you look into GE, Johnson & Johnson, or anything like that this week? Anything? I know that's not your typical area, but
yeah, no, I didn't. I mean, I saw the news. I didn't look into if I would have been interested in any of those spinoffs particularly. Maybe I need to do a bit more work there if they do end up, executing on those. There might be some that I'm interested in. From what I saw initially, off just headline reading, I didn't really see anything that jump off page to me for like a spinoff that I would really want to be in out of any of those. But that may change, as we get more details on those going forward. But for me now, I'm just sticking in what I normally trade, and for me right now, the big themes are SPACs and de-SPACs, Bitcoin miners, electric vehicle stocks. Those have been paying very well and trading very well. Good volume, good beta, lots of optionality there. So I'm just really focused on those for now. If a new theme emerges, I thought maybe potentially we were going to see the pod stock theme reemerge. We kind of saw a little bit of that today. There were a bunch of double-digit runners, especially in the small and mid caps today in pot stock. So I'm going to be monitoring that volume going into next week. That may be a sector I want to start trading depending on how consistent the volume is. I'm big on volume consistency because having a big day for a sector is usually meaningless unless the liquidity stays there, or at least some of it does. So I guess that's another sector I'm watching. But SPACs, de-SPACs, electric vehicle stocks. The space sector to me still hasn't got its mojo. There was a bit of a run when Rocket Lab was running and some of that SpaceX news was dropping. But considering how many launches we've had recently, how much more money is getting poured into this space, SpaceX's private valuation is just soaring every single round they raise. So it's something that I'm going to be watching, maybe headed into the end of the year, going into next year. I may add additional positions there outside of RDW. And again, on my decision-making process on RDW hasn't really finished yet either. I want to wait. I'm going to really be in depth on that earnings when they do have it, and listen to the call and read every detail of the report, because I don't like to just, even if I have a thesis on a company or if I'm investing in a company, and contrary to all the trading strategy that I share, I am an investor as well, and there are a handful of companies that I look to invest in. For me, they're generally higher return opportunities. I'm not always looking at companies that have necessarily proven themselves fully yet, but companies where I feel like there's a prospect to do that. So space and satellites are a sector that I'm very interested in. I just think, maybe if the volume doesn't come next month, it might be a few more months into next year before we see that sector really get picked up. But there's just a lot going on there, and I think private valuations keep getting driven higher. Usually at a certain point when you see that in a private sector, it usually spills over to the public markets, but who knows how long that's going to take.
Awesome. Thank you. So just quickly to give everyone a little clarity or whatever on how we're going to be running this thing for the next little bit. I do stock talk. I plan to come back to you for one more question after this. That's cool. And then I'm going to throw it over to Brad, give him a chance to answer some of the questions that we presented if he wants to. And then we'll get into the earnings part of this right there. Brad's going to be covering SoFi, a little bit of Curiosity Stream, and maybe some of his other stocks. And then right after that, we're going to throw it over to Jay, and he's going to cover Palantir for us, their earnings from this week. And then we'll see where we get to after that. But quickly, stock talk, one more question for you. And it's kind of maybe a two-parter a little bit in here, but really you touched on it. You're a big fan of the EV space, and it was a very, very busy week for that. So there was a bunch of stories in this area. I know Lucid was in the news and a couple other ones as well. But the ones that stood out to me were the Rivien IPO, and then all the news and whatever around Elon selling some Tesla stock. So I know I threw a little bit at you in there, but do you have any general thoughts on the Rivien IPO, how that week went, and then if anything with Elon or whatever you'd want to share?
Yeah. I do love electric vehicles, not only because I think it's an inevitable industry and I think it makes sense to have some exposure there. Obviously, the valuations are tough for a lot of the equities in electric vehicles, and I would say more than tough. They're very overextended in most cases. I would say there's very few fundamental value cases you can make in the EV sector, and that's the way it is sometimes with emerging sectors. Sometimes all the time the multiples, compress and fluctuate, but, sometimes they don't come back down to those reasonable, realistic levels. And that's why some, strictly fundamentally focused investors miss out on some of these opportunities. I mean, if you were a fundamentally focused investor, you would have never gotten in Tesla, right? And I'm not saying that people are going to catch every dart. I'm just saying, like, if you were purely fundamentally focused, without regard for momentum, sentiment, trends, emerging industries, if you're purely fundamentally focused, there would have never been a buy point for Tesla. Almost never, maybe at the inception of the company. And so you would have never been able to participate in the rally. I see it now. A lot of people look at the electric vehicle sector and they go, everything's overvalued. I agree, but everything's been overvalued for a long time. And so, it's really about where that bar is for you. And it's really about your ability as an investor to be able to differentiate, some of these more intangible value drivers in these sectors, because that's the only way to do it. When everything's trading at, 30, 40, 50x sales, it gets hard to make a fundamental case, and you have to find other ways to make the case if you want exposure. When it comes to the Rivien IPO, I did not expect that to trade that high. I mean, I thought it might have ran to 100 on day one and then saw corrective action for most of the week. I know it's a hype company, and I know the sentiment is good for EVs with Tesla hitting $1 trillion recently, but I wasn't a buyer there. I didn't even trade it. For me, when I look at things like an IPO or a big, marketed IPO like this, I try to look for sympathy trades. So, a couple good ones this week were, 10 obviously didn't get the move that I thought it would, but we still got a couple percent there, and the options moved nicely for a little bit of influx. But another good one was GGPI. That was a great trade for those that were in this week. I had a little bit, but it was from a long time ago and nothing significant to make a difference for me. But that was a fantastic trade for people who got into that this week. I know the Seeking Alpha article today kind of artificially brought some synthetic volume there, but there were good trades to be made all week. Pretty much on that Rivien IPO day, there was a ton of stocks that were rallying in sympathy. I really recommend sympathy trading for people who don't know how to find entries on a momentum runner, or people who want to be theme-based traders. Sympathy trading is a very simple way for newbies to do that, because all you really need to do is find a legitimate thesis or a case for why two stocks are related. And generally, if there's enough volume on the primary runner, generally you'll see a spillover volume effect on some of those stocks, and you'll get an aberrant move or an unusual move in the share price. And so you get price action out of it. Premiums might get inflated. And if not, you might make 20-30% on the equity on the trade on some of these. So I continue to do that when I see trends like this. But what I think about Rivian's valuation is another one that's just overvalued. Lucid's overvalued, Tesla's overvalued, Rivian's overvalued. That all that being said, I own Tesla and I own Lucid. I just own them at very, very preferential cost bases, to where I don't think either of those stocks are going down to where I bought them. So, that's, to me, my perception on it. I just try to manage risk, be early, and then when I'm not early, I'm sympathy trading or trading options around the runners, so that I don't have the risk of onboarding equity at, what I think are extended prices and then regretting it later. So to avoid that, that's how I play, these trends. It's either sympathy trading or volume trading or momentum trading, or, using optionality, selling covered calls into strength, which I've discussed earlier in detail. But things like that is what I'm doing to do it. And outside of Rivien, how it impacted the sector, I think it wasn't surprising. I think, I would have expected a pullback in Tesla and Lucid because of it. We saw that. I would have expected a rally and other pick and shovel and related plays, and we saw that. So, kind of a very expected reaction, but I did not expect it to trade to 120 billion valuation at all.
Yeah, it's wild. I didn't look at it today at all, and I just checked, and it's 130, and I'm like, whoa, okay, we're already 66% higher than the IPO price. I didn't actually include this. I did post it out as a tweet as we were looking. I didn't include it in there, but it's actually 66.6%, which, I'm not a person of science, but I guess some people might be. Take that as you will. Before I throw it over to Brad, can I just throw it over to Wolf quickly if you're here? You do me a favor. The Google Calendar is one of the best things that we have done for the spaces and for everything in general. You pitch it so much better than me and the use case of it. Can you just give us like 5, 10, 20 seconds or whatever it is on that, and then we'll move over to Brad after it?
Yeah, in 10 seconds. And if anybody is listening right now, feel free to click onto the profile and just shoot me a DM if you want to be a part of this, because 800 people almost are now a part of this. And essentially, it's really difficult to know when every Twitter space is going to be without seeing reminder tweets at a time, without scanning your timeline consistently. It's like, how can I know when there's going to be a space? Because they do not alert us for every single space, right? It's at random. It's an algo. The way to find out when these spaces are going to be, especially mine and stock market noobs, are to join the Twitter space Google Calendar. Essentially, this is a Google Calendar. It is free. It is public. And all you have to do is DM either one of us with your email and just ask to be on the calendar. That is it. Your information is not shared with anyone. And what that will allow you to do is, on your calendar, you'll then have basically a little button. You can toggle it, and you'll be able to see all the spaces for the week. We sometimes do 10, 15 spaces a week. It's really difficult to just scan the timeline and find out when they're going to be. This way, you'll be able to see it. I might start adding the speakers to it, so you'll be able to see who's going to speak ahead of time. Just a really comprehensive way to easily know when Twitter spaces are going to be. So once again, while you're listening here, we have some great information, great speakers. They come on with us basically every single week. Just hop into either one of our DMs and just drop your email and just ask me on the calendar, and we will go ahead and add you to it today.
Awesome. Thank you so much, Wolf. I can't stress this enough. This is honestly one of the most powerful things I think we've created and done together. I'm saying it's 99.9% Wolf and Wolf and Gav and everything like that on the back end, but I'm going to say I definitely think it's extremely valuable. But with that, I would love to throw it over to Brad, get a little bit into the SoFi and the whatever earnings, but also if you want to answer any of the questions we spoke on, we talked about, the spin-offs, GE, Johnson & Johnson, stuff with that, a little bit on EVs, Rivien. You don't have to, but feel free to throw that in there as well.
Yeah, I don't really have great opinions to offer on any of those topics, so I'm probably just going to move on to the earnings reports, and I'll start with SoFi, the company that we all know is trying to get your money right. That commercial stuck in my head. I'm sure it's stuck in a lot of other people's heads on this call, but really strong report for the company. Around a $250 million revenue guide. It beat it by 10%, $277 million. Product growth remained triple digit. Galileo growth was 80% year over year, despite the fact that Galileo is a payment processing API, and the pandemic and all these stimulus checks that we got really accelerated their growth. So that was pretty encouraging to me. But moving kind of down the income statement, SoFi, they beat on earnings. They were projected to lose a little bit in EBITDA at their midpoint, and they actually made 10 million in EBITDA, and this margin outperformance was attributed to cross-selling and strong demand, which is those are my favorite reasons for margin outperformance. But moving on, they did raise their guidance for the full year. They raised it by a few percent on the top line, and then basically reiterated their EBITDA margin. But because of the top line raise, their EBITDA guidance went up a little bit. But strong momentum within cross-selling was really the theme of the call for me. So Galileo is really their business to business API vendor. And then they have their more mature loan product, and then they have a financial services product that's really trying to compete with Cash App and Venmo. So SoFi enjoyed, and then there are about 3 million members on this consumer-facing app, so not peanuts. But SoFi enjoyed 65% sequential, so quarter over quarter, not year over year, increase, a 65% sequential increase in cross-buying volume from its customers. So just really kind of encouraging momentum, and despite all of the spending that they're doing to drive this cross-selling, and despite the Apple IFDA news, and despite some targeting noise, their marketing cost per member actually fell 8% sequentially, despite all these money moves campaigns, and again the large amount of money that they are spending on marketing right now to capture share. But another theme of the call was student loans. So the student loans, the CARES Act moratorium extension has shaved 50% off of the student loan volume for the market as a whole. And SoFi still delivered in their lending segment 21% growth, but that was all powered by 166% personal loan growth. So what I'm kind of getting at here is they're beating and they're raising, and their margins are outperforming, despite the fact that their largest contributing sector, their most mature sector, and their most profitable sector is 50% off of normalized volumes. So I found that to be pretty encouraging. People, I'm sure, are wondering if there's any update on the banking charter for people who know about SoFi. No update at all. I was a little bit disappointed, not super disappointed. It's kind of whatever. But I wanted to highlight the four things, not just the lowered cost of capital that a lot of us are familiar with, but the four things that this bank charter is really going to provide to SoFi. And they've already received conditional approval, so it really should just be a matter of time. But number one, like I said, lowers their cost of capital. But number two, it allows them to save or to set savings and checkings rates for their customers. So now they're currently set or mandated by their sponsor banks. So SoFi is really trying to be the one-stop shop for banking, to drive higher LTV, to compete on price, to drive more iterations. And this is just another way that they can stand out in a largely commoditized space by giving us better savings rates or checkings rates than a Goldman Sachs Marcus would give us, for example. And the other thing on the consumer-facing side is SoFi is strictly limited per state by their state license on the mortgage volume. So and on loan volume as a whole. So not only are they experiencing this 50% volume hit to their student loan product, but they're also about to get this bank charter, which unleashes, uncaps, unhandcuffs how much volume they can be generating in their mortgage segment. So they get to decide that instead of state regulators. So that's really encouraging, I think. But from a B2B standpoint, business to business for Galileo, so it's good to keep in mind that Galileo is serving giants like Chime and Robinhood and Dave.com and Moneyline and all these companies that most of them are not chartered or don't have bank charters. So they all need sweep partners. They all need sponsorships, and they all need sponsored banks in order to conduct these financial services that they're conducting. And so now we talk about better together in the SoFi business to consumer facing segment with their app. But what this allows them to do is bundle these payment processing APIs and this sweep partner capability together in order to kind of drive down price, because again, they're driving up LTV from their enterprises. So bank charter coming, it should be coming, and it is a big deal. And the other thing I'll highlight is, despite the fact that it seems like they really leaned into personal loans to make up for the student loan hit. Their average FICO score is near an all-time high of 749, so they really didn't adjust their credit parameters in order to accomplish this. But another kind of lower key company that I know Evan was interested in, and I'm a big fan of, Curiosity Stream, it's a streaming company, as the name would hint at, but it's a factual streaming company. So strictly factual content. They're going after this kind of void that's been left by the Discovery Channels of the world that have pivoted their so-called factual content to more kind of drama and reality TV and things like that. So they're really trying to be the high quality factual content vendor. And it's trick. Quarterly earnings reports with this company are pretty tricky because they don't guide to quarterly earnings. So analysts kind of give their best guess. And the reason they don't guide to quarterly earnings is because a lot of their subscribers come from large bundling deals, large distribution deals. Curiosity Stream is not Disney Plus. They're not Netflix. They don't have the brand awareness of those two companies. So they lean on Tata Sky Binge and India and Altice and these other vendors in order to get their brand out there and to drive revenue. And the reason they're able to do this is because scripted content is so cheap. It's about 5 to 10% that of an episode of Game of Thrones, for example, that they can profitably charge in a bundle fractions of a dollar and still generate a 50+% gross profit margin while doing that. So they missed on revenue, which probably was the reason that things, and I say they missed on revenue with an asterisk, and that's probably why the stock was down, because they reiterated their 2021 revenue guide of at least $71 million. So while some people are saying they missed on revenue, they didn't miss on revenue. The analysts just missed on the timing of when this revenue would be recognized. So they've also said that this guide is 100% committed. So they have visibility because 80% of their subscribers are on annual plans and they have these B2B multi-year contracts in place. So they really have great visibility into what their revenue growth is going to look like. And it's 100% committed. So we're going to get $71 million in revenue. We're going to get around a 45% gross profit margin, so $30 million in gross profit. They are growing top line at 80%, and it does trade at like a $450 million enterprise value, with forward growth expected to be in the 70% range. So really, and oh, by the way, they're having their EBITDA margin losses and their net income margin losses. So things going really well. Direct to consumer churn was the best in the company's history, quoting the CEO there. And the stock is, and that's kind of what I talked about at the beginning of the call. Company performing, stock broken. That's kind of when I'm leaning in and buying shares, and I did that this week in Curiosity Stream. And there's 9 more reports that I had to get to. So I don't want to talk for 30 minutes because there's a lot of interesting stuff to say. But if you want to kick it back to me later in the call to talk more about Upstart or to talk about these cannabis names that reported great quarters, I'm happy to talk more about that. But for now, I will leave it there.
No, definitely. I appreciate that. Curiosity Stream is not a name that too many people know or get behind. But as a self-proclaimed nerd who likes to listen and watch that type of stuff, it's been a name that's been on my radar for a while now. At least the product, I've used it and tried it out over the years, and I definitely am a fan of it. And I feel like there is a large audience of people like me who like that type of content. And like you said, there's a gap in the market. How profitable of a business is that? I haven't done my full DD into it, but the service itself is definitely something that, if you're someone like me, I mean, I feel like people who are inherently, into researching stocks might kind of find this content a little bit interesting. Maybe it's worth taking a look at it. And truthfully, with my cable provider, which we know most of us don't even have anymore, but with my cable provider, it is free. So some of you guys might be of the same situation.
Just a quick note to kind of answer your question. This will be less than a minute, but so gross profit margin for this company is already it's roughly 50%. So we talk about a lot of these other streaming startups that have maybe single digit gross profit margins. That is not the case with this company, which is one of the reasons I was so excited about it. But the other thing is, take SPAC presentation forecast with a grain of salt. I totally agree. I totally understand. But we now have 5 quarters of this company either delivering or exceeding their subscriber and their revenue forecasts, and they're projecting to be net income break even by 2023. So they are showing a lot of operating leverage in this business model, and that becomes a lot easier when you have a 50% gross profit margin to go off of. But great point, and P.S. Nerds unite.
I didn't want to assume, but I figured it was in your name, so it was okay. You had joined in on the bandwagon on that one. But yeah, definitely keep it moving. Maybe get to so if we have time, we'll get back to some of those stocks. The other ones that you mentioned, I find it weird that it feels like all my stocks they do this, yours happened, it happened to you, but like they all group up together and decided we're going to report one day, 1 week, or something like that. Why there's 3 months in a quarter, let's spread them out a little. But that's just me ranting a little. But with that, I'm going to throw it over to Jay. Would love to get a breakdown on a FinTwit favorite. I see it everywhere. There's not many stocks on here that get more attention and more interactions and engagement than Palantir. But yeah, I would love to hear your thoughts on the quarter.
Absolutely. Thanks, guys. And if anyone was interested, I'll spend time after this Palantir update in spin-offs. There's an ETF. So I've been doing spin-offs for about 20 years called CSD, which has a very low expense ratio. It's called the Invesco Spin-Off Etf, and you can actually pull it up and see all the holdings. And you can see how spin-offs like Corteva, Dow, Otis, Penn, GXO, Organon, there are a number of spin-offs in that ETF that you can look at. So just in case anyone's interested in looking at spin-offs. Okay, so with Palantir, Q3, believe it or not, revenue actually beat. And we'll get into why the company sold off in a second, but revenue 392 exceeded estimates of 385. Their margins, I think their EBIT margins were a little bit disappointing to the street. The company added 34 net new customers. Commercial customer count grew 46% Q over Q. U.S. commercial revenue grew 103% year over year. Cash flow from operations was $101 million, representing a 26% margin. That was lower than expected. Adjusted free cash flow of $119 million, representing a 30% margin. Slightly lower than expected. It closed 54 deals of 1 million or more, 33 deals of 5 million or more, 18 deals of 10 million or more. So total revenue grew, for the first 9 months of the year, that's the data we have from January 1 till now, it grew 44% year over year to 1.1 billion. So the reason why the stock sold off was total revenue growth for year to date is 44%, but growth during the quarter was 36%. And there's a deceleration in growth. And we're seeing this across all growth stocks. If there's a deceleration in growth, even if it meets sell-side estimates, and multiples are high, it is a reason for companies to sell off. So this company was trading at 30 times revenue, 100 times forward EBITDA, so 22 revenue, 22 EBITDA prior to earnings. And I had published a model about 3 months ago with a price target in the low 20s. This name was trading a lot on sentiment. It is a great business. You have, a great platform. I like the CEO, but there's some other issues with the business. One, Alex Karp received about $1.1 billion of compensation, including $798 million in options, $296 million in restricted stock, and receives a $1.1 million salary. Now that's fine. He's done a great job. The problem is that he has sold 94% of his options close to expiry, and the stock-related comp is not included in margin. So there's SBC, it's called stock-based comp. It is a very high, SBC to revenue ratio at this company. It's one of the highest on the street. And what that means is they're actually diluting their stock over time by paying people in stock, and obviously it doesn't hit your cash flow statement. And so you don't have to include it in your free cash flows. But if they did, they would be generating negative free cash. And a lot of tech companies have this, but this company essentially has a big stock-based comp component. So let's talk about the positives. So, Palantir is obviously a great company. It provides mission-critical applications for those of you who don't know the business, provides services for the robust market demand in AI analytics. The areas for concern are that, is it on the commercial side? Does it have sustainability of pricing? Does it have the ability to penetrate down market? It added 150 million of salespeople. It's kind of a TBD. What are some use cases for Palantir? Whether it's hunting for terrorists, saving soldiers' lives by predicting the locations of roadside explosives, or the other many ultra high stakes applications in both public and private sectors. They're all mission critical, which is why the company is able to sign, contracts with longer term. It does have an outsized public sector exposure, high customer concentration. Its contracts, believe it or not, I was doing some DD, they are cancelable, some of them. The main issue was this the revenue multiple. So we've looked, I mentioned earlier, there are 24 high growth names. They all reported around the same time because they're all the same factor exposure. And a lot of those names have the same hedge funds and mutual funds in those names. And I think one of the reasons why all these names sold off, especially the names that were either pandemic growth related, like a Peloton, or were just trading at a high multiple and growth decelerated, is because the same mutual funds had the same exposure. And think about it: if your entire portfolio is oil stocks and oil prices go down, and one sells off, it's going to affect your whole portfolio. You're going to regenerating liquidity in the better names to cover your losses on the worst names, and your entire portfolio, if you have selling in that sector, is going to go down. So I think that's part of the reason why names have underperformed. But before I end on this Palantir, I do want to end on a positive note. At a very high level of thinking about the business, like there is a very large public sector opportunity. That's why it trades where it is. There are not a lot of data, SaaS, analytics companies that have the government as their customer. So that provides some downside. Under 20, I think the stock is really interesting. The TAM, for commercial and government, and people argue about the TAM all over the street, but my view is that it's an $85 billion market opportunity by 2025, and it's been growing at a high single digit rate. And I think that there's, the unit economics of the business, while the company's not clear about them, I think that, the unit economics are pretty solid at this point. Whether the margins are sustainable, is something that we can focus on another call. And then one question I have for management, and I've reached out to investor relations. I encourage everyone on the call, if you have a question about the company that's not clear to you, email investor relations, try to get a call, say you're a high net worth investor and you're invested in the company. But what I want to know about Palantir is the mix of software versus services, because Palantir does not disclose the breakdown versus software revenue and services revenue. And it's hard to do a sum of the parts model when you don't have that breakdown. And I think they do it on purpose, so that they can get a higher software multiple when maybe more of the revenue is services. So that is something that I am, a little cognizant about. But overall, great company. The valuation was too high. Margins came in, growth decelerated from 44 to 36, 9-month versus 3-month. Contribution margin had been growing. It was 60% in the first quarter. It came down in the second quarter and the third quarter. I can spend a lot of time going through the business, but I'd like to stop there and maybe for 30 seconds touch on two of the earlier topics we talked about. One, I think Stock Talk had asked a question about J&J and spinoffs. I think the Toshiba spinoff that was just announced today, that I'm going to spend some time on over the weekend, was pushed by an activist investor, Elliott. Activist investors get involved in a company, they file a 13D, they own 5% of the stock. They try to do usually one of four things to a company: get them to sell or spin a business, do an accelerated buyback, pay a dividend, or change management / cut costs. And Elliott has been a big reason why we've seen a number of companies this year do certain things or do accelerated buybacks, but I'm not spending a lot of time on them today. On Rivien, very quickly, Ford owns 12% of Rivien. So a great way to have played Rivien was to buy Ford stock a couple of weeks ago, because they actually would benefit, by over 10 billion in market cap, now like over 13 billion in market cap, equivalent to their gains on Rivien. And then finally on spins, again, not all spins go up, so I want to make that clear for people who are new. You need to understand the holder base and whether this, the target is going to be part of an index, or there are a lot of technicals. We have a list. You can track it on your own through the ETF that I shared for free. And there are two examples of spins. I gave you the positive ones where we made money, like Vimeo. Like Victoria's Secret, VSCO. But there are two names that have sold off a lot because of spins, because their holder bases didn't like the companies that were spun off, and they didn't pay dividends or they didn't like the business model. One is Vimeo. VMEO, which has just been a disaster. It's been relatively easy short based on the multiple it trades on. And the other short that has been really interesting is this KD, Kindrix, which was spun off from IBM because it's an IT service company that has a lot of EBITDA backs. So leave it open to anyone. I'll give it back to stock market news and to anyone who has questions about Palantir. And, just quickly, you can make money going long and short stocks. I don't want to make it seem like, the only way to make money in the market is to go long stocks. On the SPAC side, GWH was a name where we were short because of an S1 being 600% afloat, and that was down 25% this week. So keep an open mind as we get into next year. Things are going to move not in your favor sometimes, and you need to be flexible.
All right, before I know Stock Talk Weekly has some thoughts on Palantir. I'll throw it to him in 1 second. But Jay, I just want to ask you a question that honestly it may be a little unfair. I don't know if there even really is an answer to give or that you can give out. But I led this off with Palantir is one of the most popular stocks on FinTwit, and there's a bunch of stocks that I see on here that a lot of people own. But this one is different. This one is a cult stock on here. It gets more engagement than pretty much anything else. There's a couple other ones in there, maybe Tesla, Bitcoin, or whatever. But this is if you're looking at a chart with every single stock listed on it and you rated it by engagement on social media, Palantir is one that would be extremely near the top. So I was wondering maybe if, as you've researched this company or as you've been following it for a while, have you seen any potential reason for that? Why you think maybe it's become that cult stock? Or is there anything maybe parallels that you compare it to other cult stocks kind of similarly? Or do you think it's just this one was chosen for some reason?
That's a great question. And I've noticed, I'm not an expert in retail sentiment. You want to humbly put that out there. My background is as an institutional investor at a number of large asset managers, like Goldman Sachs Investment Partners. And what I've noticed this past year and over time is that individual investors tend to have affinity for companies that have a breakthrough technology where you don't necessarily need to look at the numbers or do a lot of fundamental work, but you know that the trend is going to do really, really well over time. They could be companies with robust brands where it's easy to see they're going to take market share. A lot of individuals I know have half their portfolio still in Apple because it was a prominent brand, it was technology, they saw it taking market share, and you didn't really need to know the numbers to take a bet on the company. Tesla was another one where, because of the breakthrough technology, Elon Musk's fame, the fact that people were looking at, even 10 years ago, people were seeing roadsters and Teslas out on the street, and you didn't need to do any work on the company. That's why the companies don't always trade on fundamentals, because they tend to have a high individual investor component. And I try to say individual investor instead of retail investor. I think, I think it's just more respectful way to describe, but individual investors have different strategies at times than institutional investors. So Palantir, on the other hand, while it does have a high social engagement and it is a one-of-a-kind company, the individual investor interest in that company drove it to close to $30 a share, which was a kind of a bonkers valuation compared to any other company growing at 30-40% a year. And it does have a huge institutional investor base too. We're all familiar with ARK, but Sumitomo Bank, State Street, Geode, SIG, the State of California Pension, D. Shaw, Citadel, there are a lot of hedge funds and institutional funds in Palantir as well. And I think they drove the price probably more after earnings than individual investors did. But again, I'm not an expert, and I think Stock Talk can touch on this as well. I have noticed that individual investors who don't want to spend time modeling a company for 3 or 4 weeks, by the way, I can do that for you. But if you don't want to do that over 3 or 4 weeks and call management and look at the peers and do the analysis, they found success by buying companies with breakthrough technologies. And that's why companies like Palantir and Tesla, even IonQ recently, have done really well.
Gav, I see. I'll go to Stock Talk Weekly. I know this is a whole category and everything he likes, but Gav, I see your hand up. I know you love following social sentiment.
I think we all know where this great love for Palantir came from. If you've been around for the last I guess it was now 6 months ago, Palantir won Market Madness, and it was, it clutched. Like since then, all we've seen is a ton of social sentiment rounds. For anyone who's unfamiliar, like 6 months ago when I had like 300 followers, I ran a giant March Madness style tournament for stocks, ETFs, and cryptos with 64 of them, and it came down to Palantir versus the Buzz ETF, and Palantir clutched it in the final hour. So just want to say, we called it 6 months ago, but I think the stock's price is the same as it was then.
Looking back on it,
I'd participate. I think you guys did a great job with that. I remember looking, following all the great speakers and participants in Market Madness, and I remember Palantir being pitched, and like shortly after, I published model to the site, and it was, I had a very clear price target, it had a sensitivity with 4 different scenarios, and it looked like people didn't really care about the fundamentals at all. They only cared about the idea of Palantir. And I still think it's a wonderful company, but it ran well above its fundamental value.
looking back at that event, how did Buzz even make it to the final? That's an interesting one.
Maybe, I don't know, maybe you were pushing it. Who knows?
I was the person behind it.
It beat a lot. When you go back to that, I mean, at the end of the day, it's social sentiment. So you don't, I mean, it was just a Twitter poll, and most of these polls only ended up with maybe 500 to 1,000 people voting. I did my best to push them, but I didn't even have 1,000 followers at the time. And so, probably slightly skewed, but it was interesting to see the runs that some of those stocks went on. Palantir in that one, it beat stocks like Tesla, Square, it beat DMTK, I'm pretty sure, which was big back then, and a bunch of others. So it already definitely had a cult-like following.
Yeah, it's fascinating. Stock talk. Would love to throw it to you. I know you have some thoughts on Palantir and in general and how the quarter was. Would love to hear those. And then maybe if you have any insights or anything, or even any anecdotal stuff of seeing this around on FinTwit, but with why you maybe think it could be a cult stock.
Yeah, I mean, I think it's definitely a cult stock. When you look at, I won't comment too much on the details of the business model because Jay did an excellent job outlining that, and I don't want to be repetitive. But, what I will comment on is, Palantir is traded a lot like Neo, like Lucid, like Tesla, like some of these companies where you have an obvious cult shareholder base, and then that cult shareholder base is not driven by the fundamental value. They're not trading the chart technically. They're chasing a technological narrative in all of these cases, right? Like I think Jay kind of mentioned this about, retail investors are very magnetized by these intangible like technology narratives. Like for Tesla, it was, when Tesla in 2012 was the only real company in the world that was mass manufacturing electric vehicles, the people that clung onto the stock then, and obviously it didn't trade explosively, up until 2019, going into 2020, which is when we really saw the real ignition of, if you look back on the chart, you're like, oh my God, the stock's up 3,000%, but most of that move happened in a very short period of time. And, these stocks move off this committed shareholder base that's really drawn to, in Palantir's case, the secrecy of their technology and how it's used with so many, confidential government contracts. And, people view this as a moat. And I believe that it is. I'm not, any kind of bearish sentiment that I've had on Palantir is really not tied to whether it's a good company or not. As Jay said several times, it's a great company. A lot of companies that trade at high share prices are great companies. For me, it's just purely out of me viewing, the fundamental story as extended. I actually own Palantir. I don't really buy IPOs. Palantir, that the dip right after was one of the dips that I actually did buy. That's my cousin who's a huge Palantir bull and still is. He has like 30% of his net worth in the stock. But, he kind of encouraged me to buy it and talk to me about it. And so I did it on a bit of a whim. Once that stock was trading in the 19s and I was up over 100% of my position, I sold it personally. Now, obviously, I didn't catch the top. It ran a lot further than that. I don't know what the highs were on the stock, but I kind of sold right before the explosive run, which is funny, but I sold in the 19s and, it obviously traded well above the 20s. It traded as high as like $40, right? So, did I catch the top? No, but I made a nice profit on the trade. And for me, I got rid of it in the 19s because I felt like the valuation was getting extended. I would, view this as a potential re-entry closer to 15. And I'm not saying it will drop that low, but for me, 45 billion market cap, they're growing, but I don't think they're growing fast enough to justify that personally. And I'm not sure that they can drive this moat in their technology, indefinitely. I think as as society becomes more and more digitized and AI driven and data driven over the course of the next 10 years, I think the competitive landscape for a lot of these companies is going to change. And, unless they are juggernauts like Microsoft and Google and, Apple and Facebook, these companies have the ability to defend their moats purely with capital, and they have the ability to make acquisitions and, vertically integrate new technologies and start new verticals. And, they have brand recognition. And, that's not to make the case that newer data or software or AI companies or algorithmically driven companies can't thrive. I think they can. I just think that extending these valuations with a 5 to 10 year outlook in mind, which if you're looking at Palantir's valuation, it has to be a long-term pricing of future growth. In those cases, I think some of those, or I would say most of the valuations, are kind of not anticipating or factoring in the competitive narrative. And I think that, a lot of people say often like competition in and of itself isn't bearish. I kind of tend to disagree with that. I think the more diluted your competitive environment becomes, that is bearish, unless you have an exceptional IP moat that you can leverage over and over again. And then you're benefiting off the growth of the industry more than your peers. But in an environment where these kind of companies are constantly innovating, and it seems every year we have a new company that claims to have a software or an AI or an algorithmic moat. And in reality, the number of these types of moats that last are very few, or else we'd have a bunch of 500 billion plus software companies, which we do, I guess, in relative to a lot of other industries. But yeah, I just view it as an environment that's going to grow competitively. I think the valuation is overextended. I think the stock is really supported, and any kind of irrational support it gets in the price action is from the fact that it has a cult behind it, like Neo, like Tesla, like Lucid, like a lot of these other companies that have traded exceptionally well recently. So I don't think it's bad to trade. I don't even think it's bad to own. I just personally wouldn't buy it here. And I wasn't surprised to see the earnings reaction because I think at a 50 billion valuation, 45, 50 billion valuation, I just don't think they're growing fast enough. So that's really my look on it in a nutshell. And again, I haven't done really the work to differentiate, their products from competitive products. And so, maybe to a degree, I'm ignorant about the potential, but from what I see, I just can't buy it here. And that's just really how I feel about it.
Quick follow-up, Stock Talk. I really agree with a lot of what you said. Before Palantir earnings, you could have sold $25, $30 calls and had a covered call strategy. And because there's so much social sentiment behind the stock, you could have sold those at $280. So $280, if your cost basis in the stock, let's say was $15, and you took in calls at $280, okay, you could have lowered your cost basis to $12.20 by taking those calls that were only 2 months out, 60 days out, 44 trading days out. And those calls today are trading at 58 cents, so you could buy them back. So you would have harvested $2.30 of gains. And that's kind of the power of covered calls with social sentiment companies. If you have a position, sell covered calls up 20, 30%. If the company's already a rich valuation, and over time you keep lowering your cost basis. From a competition perspective, there are going to be other AI companies. Just like there's Lucid today, there are nascent AI companies coming out there. So there's a SPAC called GIG, BigBear.ai, GIG, which could be a sympathy play to Palantir. It is run by some pretty heavy hitters, and just keep an eye on it, because I don't think Palantir is going to be the only company that provides, AI and really interesting, data to government and commercial customers. There's also a company called Data Miner, which is backed by Rockefeller family, same company I sold my company to, Venrock. And that company is a really big colossus and data company as well. So you're going to see more and more companies that compete with Palantir over time as well, although it does have a bigger moat, in my opinion, than an EV company.
Yeah, I was just using the EV companies as examples because they have those
100%.
shareholder base. Yeah.
No, 100%.
Awesome. Thank you. I love the talk. We got hit a bunch of stocks throughout the spaces. It is 5:20, 5:30 on a Friday. I know a lot of people are probably thinking the same direction, so I don't want to keep people here for too long. So we got 2 segments left. The first one is going to be going through Wolf's newsletter. The reason we're going to go through it, honestly, it's not just to promo it, because we don't have to. The reason we do this is because I think it's super valuable. His newsletter, it's part informational and it's part entertainment. I think the time it is, 5:30 on a Friday, this is the perfect time to get you a little bit into that shift from pure business, pure market and everything like that into a little bit of fun and a little bit of the weekend. So I'm going to go to Wolf for that. And then after that, we're going to go to everyone for the wrap-ups. Maybe some thoughts of what you guys are doing some research into this weekend, if you are, or just anything you guys are looking forward to next week or anything you got going. But I would love to throw it over to Wolf Gob first, if we can get a little, fun insight on your newsletter.
Perfect. Thank you so much, Evan. And I appreciate that intro to the newsletter. It's been really well received and awesome to see its growth over the past few weeks. So since the last issue that I sent out, subscribers are up about 300%. Wish my stocks did that in the same time period. But essentially in the weekly howl, I just was trying to figure out how can I give people something interesting, entertaining that only takes up about 3 to 5 minutes of their entire week. And so what I do is I spend over 40 hours a week on Twitter. It's my full-time job. And because of that, I read thousands and thousands of tweets. And along those lines, I am able to discern and decipher, what are some good tweets, what are some better tweets, things on this line. So I break it down and I pick the top 10 tweets of the week. I have a couple other people now that actually help me. I'm trying to be a little bit less subjective to it. And with that being said, I'm just tweeting out right now from the account. If you go and check, I put them all out as both a newsletter and a thread. Again, the newsletter is also linked in my bio. And for this week, the way I did it was there are 3 tweets which are stock related, and there's 3 tweets which are more like finance humor related, and then there's 4 tweets which are just all around really, really good tweets. So up top, we first had Brad, who was highlighted his amazing write-up on Upstart. A lot of people freaked out about Upstart, but if you read into the actual details, you probably wouldn't be freaking out. So it's helpful to have someone who can outline that. Number 2, I went to Dividend Seeker. I think a lot of people kind of understand dividend stocks, but it's really hard to picture in your mind. So there's a great tweet of if you put 5,000 in this, 5,000 in this, exactly how much dividend income you would get per year. Number 3 from Brian Shannon. If you've been on these spaces, you've probably heard the term anchored VWAP so many times, but a lot of people don't know what it is and they don't know how to use it. Brian Shannon, the creator of it, put out an amazing tweet where he explained exactly what it is and how to use it. Then we had our 3 finance humor ones. I went over some stuff about inflation, some stuff about coins, some shit coins, and one about the Leo DiCaprio and Jeff Bezos thing that happened this week. All from really great tweeters, I think, Trunk Bang, Niraj, a couple of others. And then there's 4-star tweets, one from Jonah, where he posted about DMTK, which dropped 20% after hours from their earnings. But again, if you read into the earnings, there was nothing to worry about, and they rebounded by the next day. One from Dividend Hero in there about just taking the power of investing over time. Number 9 was about the surprisingly strong resistance level for Bitcoin, which happens to be 69,420. And then number 10, there was this awesome flow chart on what are NFTs, what is their structure, how does it break down. So I just posted that to my page. Again, you can just click in my bio to subscribe. I think it's going to hit 1,000 subs to the newsletter today, I'm pretty sure. And I'm going to go ahead as well and send it out to my subscribers through the actual review system in just a minute. But really appreciate you, Evan, giving me the time to highlight that. And in case you're wondering, Evan has his own newsletter as well. It's the Bullish Rippers account that's up here. It's the Green Raccoon. It is definitely really stock focused. It focuses on these deep dives into what's happening. He'll hit right on earnings. So like earnings happen and you get this deep dive right afterwards into some really great stocks that could be long-term opportunities. Again, he's a great long-term investor. So go ahead and check out the Bullish Rippers one, which I believe you can sign up inside of either his bio or the Bullish Rippers bio. But yeah, appreciate the time, man.
Sorry, I got lost in digging into some stuff and I had to come back. But I was actually looking into this before I said it, but a couple of our other speakers up here have amazing newsletters as well. I've heard Jay mention it once or twice, but click into his profile. That's right up there. Brad, I know, has a newsletter as well. It's on Substack. Everything up here is free. They're great additions. And I know Stock Talk Weekly doesn't have a newsletter, but he's working on an exclusive trading club. It might already be filled up, and he might get annoyed because of the DMs of everyone's going to want this, but it's already filled up and they're not going to be able to get in. But just, I don't know exactly where that's in. It's not in his profile, but send him a DM if that sounds something interesting that's interesting to you at all. I'll give them all a chance to promo that.
Yeah,
Stuff.
just to, I don't want to interrupt you, Evan, but yeah, the link in my profile is not updated. So a lot of people have been clicking that. It's going to put your email in there. It's going to send you to an inactive Discord that's not yet active. So that is coming before December 1st. I'm building out the platform right now with a few people. So if there are people in here that have reserved, and I know there are a lot of people that have reserved a spot, if you've sent me your email, whether or not you got a DM, you are on the reservation list. So just know that. Just want to make that clear. Sorry, Evan.
No, thank you, man. I am a fan of putting light pressure onto people. So if you're in the spaces right now, send Stock Talk Weekly a DM. Tell them December 1st is not soon enough. We need it earlier. But with that, I'll move it on to wrap ups. I think mine was as well start with you, Stock Talk. Anything quickly? Are you doing more research into anything this weekend? Anything stand out to you? And maybe something we're looking forward to next week, or if you got anything planned with spaces or events or anything you got going.
Yeah, I'm gonna be continuing to do spaces every week as I normally do. I think it's it's my way of trying to give back to the community and just answer questions and potentially educate people on new strategies, or maybe bring up a stock that somebody's not thinking about or hasn't heard of. So I love doing these. I'll continue to do those. For people who follow me, my page, I make it very clear when I'm making a day trade or a sympathy trade. I tell you about it. I tell you why I'm trading it, why I think it could move. When I'm making swing trades or investments, I tend to be much more detailed. I'll either write a thread or put out several tweets detailing why I think it's a good trade or a good investment. So I do a little bit of everything. I don't alert specific options contracts because I think that's inappropriate to do. But even though there's a lot of people that do it, no harm against them. But I have a little bit over 100,000 followers, so if I do tweet an options contract, there's going to be a lot of fake price action, which I don't like to do. So that's the one thing I don't do. But if I am getting calls on a stock or getting puts on a stock, I will say that. I just won't say which ones. And I also try to provide strategy information, things that I do strategy wise that I think could be helpful. I do a lot of tweets on that as well. Psychology analysis. I do just general news about the market. So if it's a stock that I cover, especially, or a stock that's on my master watch list, as I call it, I usually tweet news about those stocks very, very timely fashion. Usually, I'm not usually more than a minute behind the news itself. But yeah, that's what my feed's about. That's what my page is about. The premium room is coming soon for those who have DM'd me and sent me their emails. You're reserved. And then, yeah, that's about it. Trying to trade a little bit of everything, trying to learn every day myself. I encourage people, a lot of people that I know that have traded for a long time still come into these rooms and still try to learn. I learn every day when I'm in them as well from other speakers. So give everybody up here this follow. Give Brad a follow. He's a great fundamental guy. I recently found his feed and started reading it, and he has great stuff on why he's picking companies and analyzing them, and really good stuff. Jay's another fundamentally based guy. He's been covering SPACs a lot recently. Great feed. He also has some premium options as well, which I encourage you to check out if you're a really fundamentally driven investor. Wolf is awesome. Obviously, we know Wolf has been bringing a lot of us together, and he's become a good buddy of mine over the past few months of us doing spaces together. And Evan, Stock Market News, another good buddy of mine. You know, most of the spaces that I'm in with Wolf or Evan, they're usually in both of them. So spend a lot of time with both of these guys. Evan's always on top of the news. He's killing it, always dropping it timely. I see his news sometimes before I see it from the actual sources. So, you know, definitely give him a follow and check that out as well. But appreciate you guys having me as always.
I appreciate you, Stock Talk. We're lucky to have you. The invitation is literally always open. Every space you're in is made better with it, by it. So definitely appreciate you. Love to keep it moving on the wrap ups. Brad, anything you got for us? Anything you have planned for next week, or you doing research into anything this weekend?
Just kind of scrambling to get the post out that I publish every Saturday morning. That's going to have a lot of earnings coverage. So I'm going to post that, and then I'm going to watch the Michigan Wolverines. Sorry, Evan, but the Michigan Wolverines beat Penn State tomorrow at noon, and move into the top 5 of the college football playoff rankings. So I'm just really excited for this week to be done. It's been pretty stressful. I'm also a grad student, so kind of juggling this in classes was not was yeah it was I love the work, so it's fine, but just ready for Saturday and ready for Michigan football.
Yeah, dude, you've definitely earned the weekend here, and it's interesting because I was actually planning to watch Penn State beat Michigan tomorrow, so it'll be weird to see if yours actually pans out, which one pans out. But it all comes down to Thanksgiving weekend. We know that, or Thanksgiving Saturday. Jay, would love to throw it to you. The same thing.
Hey guys, thanks again for having me on. I'm actually headed up to Boston this weekend with my girlfriend before it gets too cold. I was going to reach out to Jonah, but I guess I'll just see him next time I'm up there. Again, you know, I publish with a small team at specialsitsresearch.com. We cover spins, we cover cash holdcos, we cover event-driven strategies, merger arb, we cover REITs and SPACs. Whether it is SPAC warrants or pre-deal SPACs or D-SPACs, low float squeezes or S1 pipe unlocks. Thing I want to leave everyone with is, you know, the market is very highly valued. We're at all-time highs. I think we hit all-time highs 61 times this year. And we were up like 15 out of 17 days in a row, first time since like 1995. So just keep in mind, this is a short paragraph from Seth Klarman, who runs Baupost, a $30 billion hedge fund, who keeps 20% cash handy at all times. If you adjust for the cash, he's actually beaten Warren Buffett in most years of his investment career. And this is a short paragraph from him. High levels of greed sometimes cause new era thinking to be introduced by market participants to justify buying or holding overvalued securities. Reasons are given as to why this time is different from anything that came before. As the truth is stretched, investor behavior is carried to an extreme. Conservative assumptions are revisited and revised in order to justify ever higher prices, and a mania can ensue. In the short run, resisting the mania is not only psychologically but financially difficult, as the participants make a lot of money, at least on paper. Then, predictably, the mania reaches a peak, is recognized for what it is, reverses course, and turns into a selling panic. Explains like the growth name kind of getting the growth names being down 30%, even when numbers are decent. Greed gives way to fear, and investor losses can be enormous. So he's talking about the junk bond market, you know, in the 80s, but this type of narrative, it happens every 10, 15 years in pockets of the economy, or as the, you know, for the market as a whole. There tend to be very overvalued forms of thinking. I tweeted, my most successful tweet this year was actually not about anything about finance. It was about a guy who works at a hedge fund. He's an IR professional, basically investor relations, 23 years old, made $1.5 million converting his Ethereum portfolio into NFTs, and basically just never showed up to work, didn't tell his boss. They kept calling him, emailing him, you know, just a no-show. And I haven't seen that type of behavior since 1999. So I'm still long a lot of names, but just keep it in the back of your mind not to be in overextended or using leverage or be too concentrated at this time, especially before 2022.
Thank you, Jay, for that insight. There's a couple of things that I've noticed with being in the market for a couple of years now, and the market loves to lull you to sleep, loves to think we're going in one direction, so everyone gets levered up, in one way, and then boom, it snaps. Like the second you think you have a handle in the market is the exact second that the market goes the other way. There's a lot of strategies that you can do to limit the hurt on this stuff, whether it's, positioning your trades correctly, investing with the right amount, not going all in on positions. There's a bunch of ways around it, but yeah, this is definitely something that I agree. There's so many different anecdotes and a lot of different quotes that you could say, but just overall, whenever you're swimming the same stream as everyone else, I tend to try and second think and think, is this the right direction? Because, there is that old saying or whatever that like only, 20% or 10% of people in the market make money. Well, if we're all going in the same direction, maybe we're all just the greater fool or whatever with that. So always be questioning, always stay curious, always, look for the downside in stocks you're bullish on. There's always a reason for it. Sometimes you just have to even change your mindset or look harder, because pretty much with almost every single stock, there is at least one or two downsides that you should be able to point to. Maybe there's that one situation where it just doesn't happen. But yeah, I would love to throw it over to my co-host, Gav Wolf, for his wrap up. Before, though, I would love also, can you throw in another good breakdown on the Google Calendar as well in there first?
Yeah, 100%. And I already got 25 people in this space who have signed up and are now on the Google Calendar. We are closing in on this 1,000 number. So if you haven't already, just feel free to hop right into my DMs if you want to be on the Google Calendar. Works best with Gmails, but I think it works with other emails as well. And essentially, if you want to know when all of my spaces and stock market news spaces are for the future moving forward, all you have to do is just DM one of us your email, make sure your email's in there, and just ask to be added to the calendar. We will add you right away. It will make your life a lot easier when it comes to spaces. Honestly, this is an invaluable education. Like people like Stock Talk Weekly, Brad, others, like they could go to Seeking Alpha or something. I know that, but there was some hate thrown at Seeking Alpha. I won't use that name, and some others. But like they could give paid articles, they could buy on paywalls, but they're choosing to be here for free to everybody. Anybody with a phone can access this. It's amazing. And so if you want to know when these are happening, again, just slide in the DMs and I'll add you to it. And that Google Calendar will just overlay onto your regular calendar. It's a one-click on-off. Nobody can see your information, and you'll know when all these spaces are. I'm going to, over time, just make that more robust. You'll have better outlines of the spaces. You'll be able to see who the speakers are ahead of time. Again, like this is my full-time job, being on Twitter, running spaces. So I'm happy to go hardcore with this. So if it's something you're interested in, I see DMs coming in now. Love to see it. I spent probably over 3 hours this week just going through DMs, and I'm very happy to do that because it means that more people are benefiting and journeying towards financial freedom. So that is all for the calendar.
Did you have anything else you wanted to add, wrap-ups, or anything you got going next week? I know you probably already have 75 put in spaces planned.
Yeah, I'm going to work on the spaces. I basically work 7 days a week now because for the first, I do spaces all week, and then Saturday and Sunday, I just DM with like 100 people and plan out the next series of spaces, get those on the calendar, make the graphics for them, touch base with my team, all those type of things. Yeah, this week was, really great overall. Finished basically flat, but with the market, I'm not going to pay attention too much to that. Rather, just really excited that I was able to connect with a lot of amazing people this week. Always fun to bring more people into this. I want to give real quick a big shout out to Angie Smith from Black Box Stocks. It's at Lovely Trade. She has made my life so much easier. She comes to all these spaces and records them. So if anybody's appreciating the recordings, that's from Angie. So huge shout out to her. And you can access all space recordings through the link in my bio. You can see them on Spotify, on Apple Podcasts, on YouTube. I've been trying to get them up real quick, real fast. I have one right now I'm about to upload. And it's not like she has to record it, she has to upload it. Then I download it, turn it to MP3, compress it, upload it, write descriptions. It's like a whole process. But big shout out to her and everything that she does because I couldn't do it without her. And yeah, looking forward to next week. Hopefully we'll just continue to make moves in this market.
Love it. Thank you so much, Gav, for coming in here and helping me put this together. Big shout out to all the speakers who came up here and gave a lot of invaluable information and gave across so much value in this last hour and a half, hour and 40 minutes. Let's be real. It's if you've been in here for the last 15 minutes and you're still in here as we've been going through the recaps, like you are clearly a fan of the content, everything that's being spewed out here. Just check out all the speakers. Like, we don't bring up random people for these spaces. We really try and get in just the top of people on FinTwit who can really give across amazing information. And we always have amazing, fantastic spaces in here, but they're putting out equally as good content on their feeds 24/7. These are some of the people who are on FinTwit and doing this stuff all day, every day. They are amazing follows, every single one of them. Stock Talk Weekly, Brad, Special Sits, Jay, Wolf, my co-host. Make sure you check all of them out. Quick shout out to Bullish Rippers, who sponsored the trade of the week. We'll get more into that on Monday. And then shout out to the Wolf Gov Blacksburg account that's up here as well. It's Wolf. It's his personal account. He's been working on that, putting some good things in there. So if you're a fan of him, make sure to check that as well. Gav, you have something to say?
Yeah, hit some nice milestones. I was talking with you in the beginning of this week. I really wanted to get that account to 5K. It did. And the Wolf account just hit 33K. So I don't know. Nice round numbers that literally mean nothing in life, but I'm all for them.
Big shout out. Listen, stocks have taught me this as well. People love round numbers. Even if it doesn't mean anything, in our heads, it's a big milestone. But yeah, so just one more big shout out to everyone that came in here and listened. I know probably a bunch of people have been cycling in and out, but the only reason these are valuable, the only reason that everyone up here wants to come into these spaces so much and give this information is because there's people on the other end listening to it. A lot of the times you get DM'd questions, and it's interesting because you're only really helping one person. But one thing that I love about these spaces, we could take topics and give information to, right now we have 400 people, but we were over 500-600 at some points, which I think is super invaluable. Everyone up here is always on spaces all the time. I'm going to give you one more pitch for it. Check them out. Give them a follow. You will not regret it, any of them. You will not regret following any of them. But I'm going to stop pitching, stop doing everything that everyone. It's Friday. It's been a long week. Make sure you have some enjoyment or whatever you got to do. Hoping everyone has a good weekend and comes back recharged for Monday. We got a spaces bright and early, 9:20 a.m. Good morning, FinTwit will be live to start the week. But yeah, everyone, hopefully you guys have a great weekend, and looking forward to see you guys back here next week.
Have a good weekend, guys. Get some rest.